afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. It's a Friday and we have Jessica Amir, market strategist at Saxo Capital Markets, as our guest today. Jessica, good afternoon.
Good afternoon. Great to see you again.
Great to see you as well. Now, Jessica, we're going to come back to you in a little while, but before that, we're going to take a look at crypto markets and also how regional stock markets have been performing in the first half of the day. Now, Bitcoin is at 23,948.1. It's up 3.77%. Ethereum is at 1,734.4. It's up 6.16%. Now, looking across the regional stock markets, firstly, Thailand stock market is closed today for a holiday, but we'll start with the numbers from the SGX Straits Times Index in Singapore. It's down 0.15%. 0.5%. Now, KLSE in Malaysia is up 0.29%. Shanghai is down 0.84%. The ASX All Ordinaries is up 0.82%. The Nikkei is down 0.32%. The Hang Seng is down sharply 2.29%. And rounding up the numbers, we've got the Kospi, which is up 0.49%. Now, Jessica, the markets are looking pretty mixed in Asia, but we've had news out of the US, of course.
Yeah, absolutely. And to sum it up, I'd say that for the most part, earnings results here in Australia and in the US, they've actually been not as bad as feared. So that is supporting the rally that we're seeing at the moment. Another reason that we are seeing equities broadly rally higher, up in the order of being 8% up off the lows, is that because the US dollar is falling. Another reason, the third and final reason I would say, is that we're seeing a lot of the logistics issues be cleared. And we saw that in Apple's results as well overnight. So Apple kind of alleviating a lot of concerns that logistics issues will be lingering this year. So logistics actually supporting the bounce back as well.
But Jessica, what surprises me is the fact that despite the fact that the US has essentially gone into technical recession, markets seem to brush that off very, very easily. What are some of the other factors you think that are causing this not to be priced into markets?
Well, that's a really good question. I'd say that the market has actually priced this in, and that is a big part of the reason why we did have the pullback earlier and the markets have been so bearish. And we're starting to see the market being forward-looking now. Yes, we do have a technical recession, but we don't think that this is going to be a deep actual recession. And the reason for that is, Brian, is that employment is at a record high. So for every one job vacancy, there's 1.1 people applying for those jobs or applying for that job vacancy. That's in the US, and that's also here across the Asia Pacific region as well. Another thing that we're seeing that's doing quite well is that the travel sector, and we have to remember that's 10% of the global economy, Brian, and the travel sector is teeming. And we saw that in last night's data as well. So, yes, the US GDP did fall for the second straight quarter. However, personal consumption is showing resilience. And if you dive into those details, we'll get a little bit more from the US tonight for the PCE data, but we are still seeing the travel and tourism and cafe and restaurant consumption move along quite strongly. So that is also supporting the rally as well.
Now, there's also a commodities rally that's also now come into the picture. Why is that happening?
Yeah, so quite interestingly, we thought that the commodity market would stay quite bearish for some time. However, because of the sentiment kind of shifting, we're seeing the USD now fall off its record highs. And part and parcel of that was because the ECB, the biggest bank in Europe, European Central Bank there, rose rates more than expected, rising rates for the first time in 11 years. So that is one of the reasons why the US dollar has fallen off its low. And given that all commodities are mainly purchased in US dollars, we are seeing a commodity demand pick up. And secondly, another key important reason that commodities, or the Bloomberg Commodity Index that tracks 23 of the most traded commodities, Brian, we are seeing that index actually be up about 11% off its low. And that's also supported by market participants focusing on the fundamentals being quite weak. And what I mean by that is that we are seeing the market focus on what is going on, and there is a punitive lack of supply. So in the US, we are seeing drier than expected conditions, and that is why soybean, corn and wheat prices are up. The wheat price is now up 8% off its lows. And if you also have a look at oil is continuing to rise off their lows despite falling overnight. And then if you also do have a look at the iron ore price, which is important to Australia, and BHP and Rio Tinto and Fortescue Metals, those huge commodity giants, their biggest revenue maker, iron ore. Well, the iron ore price is back above $117 for the first time in almost 8 weeks. So quite significant. And this really is an indication that forward-looking earnings are going to pick up for the commodity sector. So we are seeing a lot of clients buy back into the commodity sector, given that there is a brighter future ahead.
So then, Jessica, what else is next for markets moving forward?
Well, I think one of the key things that you touched on, and you importantly mentioned, is that we do officially have a technical recession in the US, but we do have as well rising inflation. And so US inflation is at an all-time high, indeed Australian inflation, and so is Singapore. And we expect inflation to be on a runaway train for the rest of the year. So given we've got slowing and benign growth, indeed negative growth and rising inflation, we're now seeing investors adjust their portfolios for stagflationary environments. So this is why we're seeing trades in commodities pick up, and we expect that this will continue for some time, also supported by a lower US dollar. That being said, tonight in the US, we'll get a real gauge of how consumer spending patterns have changed. So we've got PCE data, which will be stripped apart. We're expecting those things that we touched on earlier to be honed in on. So how consumers are spending their money, how much credit card spending has slowly trickled up, and how much travel and tourism and cafe spending has purchased, or purchases have increased as well. So that will be key, and stagflationary positioning, going overweight into commodities, and also picking up some cybersecurity and logistics positions will probably be front and center, as well as, of course, buying back into big tech, given results not as bad as expected.
Now, Jessica, thank you very much for your insights, and thanks for coming on the show.
Thank you so much, Brian.
Now, we've been speaking to Jessica Amir, market strategist at Saxo Capital Markets, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our various platforms, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.